Hello, everyone. I trust you've been doing great. I want to sincerely apologize for the break in uploads of videos for a while. I mean, I was a bit confused on how to upload the videos. You know, if I had to start uploading setups, it had to be spontaneous, and then I wouldn't have time to make intro or something. I was just confused and a bit destabilized. I mean, I was on the move and stuff, so I hope I would make more spontaneous videos now. And then for my previous quick analysis videos, I hope you were able to take advantage of it, and I hope you made profit of it. If you didn't, well, you probably keep missing out if you don't subscribe and turn on my notifications. So let me explain the previous video. Alright, so I mentioned BTC being bearish to 42,500 or thereabout, and then it's currently trading at the support, which is the previous low. Alright, so I'm still not bullish on this pair right now. As you can see, there are chances of this support breaking and becoming a resistance, just like it happened right here. See, there was a double top. I'm sorry I couldn't update all of this. My apologies, really, but I don't know. I've just been caught up in a lot of things and I didn't know exactly how to put out those videos. That's why I had to just put out that one in the morning as quick trade setup. Alright, see, there was a double top here, and you know what you do at a resistance, you sell, and then it broke, the support broke and then became a resistance. See, went like this, then down, then back up. It ranged for a while and then broke again, and then formed a lower low, and then broke again, the support became a resistance, and then it keeps making lower lows and lower highs. That's the downtrend market structure, like I explained earlier. So I hope you caught this trade. I'm going to take my profits now. I hope you're able to take this trade, and if you're not able to take this trade, oh well, I hope you turn on notifications next time, subscribe, like, share, and let's make money together. Okay, I'm also going to explain how I took this trade now. Alright, so I want to explain how I took this particular trade. It's a different method from the initial one where you calculate your, where you start the trade by calculating your risk, how much you want to risk on that trade. So for those who have higher risk appetite and want to risk huge on a particular trade, you want to risk 4 digits on a particular trade, that's how you can go about it. Alright, so let's say you want to risk 1k on a trade and then you don't want to do the whole calculating thing. You can do the DCA method, which is you have certain amount you're willing to risk. Say your mind is made up to risk 1,000 or 2,000 in a particular trade. On that particular trade, I risked 1,000. So how did I do it? I have 2,000 balance, and then I'm risking 50% of it. That's 0.12. I'm risking 50% of what I have, and I'm keeping the other 50% as insurance. Now, I also used 5x leverage. This means for my 1,000 to get exhausted, it has to be 5 times 20. That's 100%, yeah? So the market has to go against me 20%. 20% would give 1k. That means my 1k would get liquidated when the market goes against me by 20%. BTC, and I was on a sell trade, so BTC has to move up by 20% before I can get liquidated. And that's 1k get liquidated. I still have another 1k, and then if I'm so sure of what I'm doing, I could like this year at another resistance with the remaining 50%, or add more money as insurance to take another shot. And then when I take an iron shot, another shot from a high price, it's going to increase my position. Say I enter the short at 43,700, and then my price price went against me, say to 44k or 45,000, I can take another shot there. If I don't take another shot at 45,000, that's this year, my entry price goes from 43,700 to like 44,000. So if market goes from 45,000 to 44,000, it means my entry point is now 44,000, and then I'll be at break even at 44,000. That is this year. So that's another method you can use, but do not use this method if you do not have equity to play around, and if your risk appetite is low. Just stick with calculating your risk before taking a trade. That's like much safer. But for this, your percentage is higher, and then you grow your account faster. But only do this when you're sure of what you're doing, you know what you're doing. So by the time I did that, my order filled and it was 0.11 at 43,700. Another thing I would like to explain is, with this method, your percentage here is percentage of the amount you're risking as against the percentage of the portfolio you're risking as against percentage of the calculated risk in the first method. So you want to risk 100 USD, for instance. Your percentage gain here is going to be, the percentage here is going to be percentage of what you're risking, or you made 9% of the 100 USD and stuff. But some 9%, some 1% actually are even greater than some 200%. So it's not about banners. Don't clown yourself, don't fool yourself. Make sure you're actually growing your portfolio. If somebody risking a portfolio of 4,000 now makes 1%, 1% is 400, and 400 is higher than 200% of 100 USD that you're risking. Is higher than, do you understand? Or somebody risking just 50 or 20 USD and then making 200%. I mean, your 200% is less than 50 USD, but 1% of 4,000 USD is definitely higher than 1% than 200% of 10 USD. Do you understand? So it's not really about the percentage, it's not about the banner. Don't get fooled by it, don't clown yourself. Make sure you're actually growing your portfolio. Now with this method, even if you're doing 3%, 5% is a lot. Imagine growing your portfolio by 5% for every trade, and it's not going to be constant. If you're risking 1,000, for example, the 1,000 you're risking is not going to be the same tomorrow. If you've grown your account by 5% today, the next trade is going to be 1,000 plus the 5%, and then you're making another 5% of it, and then you keep compounding your profits. So that's the advantage of this method. You don't have to stress yourself, you don't have to get worked up. Just grow it. Don't risk too much, manage your risks, know what you're doing, be confident. That's it. That's what it takes. Grow it bit by bit, compound it. You don't even have to touch your money if you have other funds for bills and all that. So now look at it. I'm actually not surprised. Alright, this is just simple basic market structure. Market making lower lows, lower highs. I'm not surprised it broke this supports like I mentioned earlier, and then it just might become a resistance, and then we'll see lower prices. I mean, just follow the market structure. You don't have to fight the market, you don't have to force what you're not seeing on the chart. I mean, just go with the flow, really. So that's that on market structure. I made profit on that trade, so I hope you did too. If you didn't, well, I hope you subscribe to my channel, share, like, subscribe, and turn on notifications so we could make money together. Thank you very much for watching. See ya.